Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy Podcast, and today we're going to do a quick market update on USDA and what's going to happen with rates, and we have a couple of event announcements for the OMBA as well as the Midwestern Ohio Association of Realtors, and we're going to dive right into this thing. Sorry, it's been a little bit hit and miss. It is summertime, and so we might be going every other week for just a little while until things get back to normal. Kids off school, they constantly want to go. People are buying houses. It gets a little busy. So let's dive into just a couple of things real quick on events coming up. So on Monday, July 14th, if you are watching this, you are a local real estate agent. You are part of the Midwestern Ohio Association of Realtors. That's more. We are putting on, we sponsored it and brought them in. Mosaic Valuation Services is going to be teaching a class, which is a 1-hour CE class for realtors. Reconsiderations of value and appraisal bias. That is Monday, July 14th at noon. It's going to take about an hour and a half here. So lunch will be provided. It's free for more members, $10 for non-members. So if you are watching this in your Dayton market, Lima market, whatever, you still want to attend, it's $10. So that'll get you some of your CE classes in. And you'll learn about the new process or newer process of getting a reconsideration of value completed. Which isn't just on your lender anymore. We used to just get comps from agents and just send them in and make an argument. Now the buyer's involved, the realtors are involved. There's a lot more to it, and there's a specific process that we have to do now, or which we have had to do for a little while now, but a lot of people aren't aware of what that process looks like. But that's what that class is all about. So thank you again for Mosaic Valuation Services for coming in and teaching that class for us. But other event, the OMBA, the Ohio Mortgage Bankers, we are kicking off with a new director. And we have our golf outing on September 22nd, 2025, which obviously is this year. It's the OMBA outing, and it is going to be held at Tartan Fields in Dublin. Again, September 22nd of this year. And it is a fantastic event. So if you want to get some more information or you want to sign up for that, go to the Ohio Mortgage Bankers Association website, and you'll be able to download a PDF and sign up for that. All right. So enough of that stuff. So let's talk two things. One, let's go USDA. So USDA just came out. They announced income limits have increased, which is a big positive. Last year we got a nice little couple $1,000 increase. This year's a little bit better. So before it was like $112,000 for a household of 4, $147,000, $148,000 for a household of 5. USDA income limit for a household of 4 people or less. All right, so it can be including your spouse, girlfriend, fiance, children, you name it. 4 or less people. Max income is $119,850. $119,850. So this could open up the game a little bit to some more buyers. And the household of 5 is $158,000. So if you have a 2-income household, or if you have adult children that live with you that also work, $158,250 is the max income limit for you to qualify. So we can't be over those limitations in order to go USDA. If we could pair that with the non-borrowing occupant, right? The non-borrowing occupant, you know how we run into this with USDA if you have a girlfriend, fiance, married, what have you. If they're working, we have to document their income to ensure that the household's under that mark. Well, they announced that change a while ago. They just didn't give us a date yet that they're going to remove that requirement and go with the income of just the people on the loan. 1 borrower, 2 borrowers, whatever the case is. And that could help us open up a lot more people into USDA financing so we don't have to compete with that income limitation. A lot more buyers. If they're a single buyer under 120, it's going to be fantastic. It's going to open it up. Huge. So there's still no date on that. I'm hoping October 1, when their fiscal year renews, or however you want to call it, whatever it is. I hope that's the plan. Let's talk rates real quick. Haven't seen any movement, even though the world's on fire, in a positive or really a big negative way. But the Fed did keep the rates unchanged, which we kind of touched on before, that we thought September was going to be, it was like 62% chance that the Fed was going to, our confidence rate, whatever it was, that they were going to drop the rates a little bit. Even though there's been repeated requests from the executive branch to drop rates 2.5 points. 2.5 points. Again, remember, we talked about this before. Fed funds rate is the bank's ability to borrow money from the Fed to lend out. That is not the actual interest rate itself that you might be able to borrow funds from the bank for. Okay? There's a big difference. But they do follow, right? It's going to trend that way. If we have our Fed funds rate down at 2 or 2.5, I mean, we haven't seen those levels since 2020, 2021. We're going to see, don't quote me, but we could be back into the 4s again, right? That'd be huge. I mean, it'll slowly trickle, right? Because they're not going to do a 2.5 rate cut. That's going to be over time. They're not going to do it in one swing. So, but that'd be huge. For people refinancing that have bought over the last 2.5, 3 years, cut that interest rate down, save a ton of money. I do recommend getting close to 1 point drop in your rate before you pull the trigger on a refi. But this could be a sign of some good things to come. But the Fed did say that they expect 2 rate cuts to occur this year, as they do anticipate unemployment to creep up a little bit on us. And I kind of get why they're holding off a little bit. Inflation right now, that is sitting right around 2.4%, which is the best we've seen in a couple of years, probably since the beginning of 22. Right when everything started to take off on us. But the target's 2, right? So I'm sure the Fed chairman is just sitting there thinking, well, listen, we're so close to our target, let's not screw it up. But at the same time, I get the calls for the rate cuts because we are so damn close. And I'll tell you, if we get a small rate cut, it could really, really boost the housing market specifically, but boost economic development in general. I mean, just think about all the impacts that rates have on people. You know, businesses' ability to borrow monies in order to operate, people that are sitting on the sideline to start up new businesses and what that cost difference would be. I mean, there's just so much to it, right? People live on credit. Businesses live on credit, and their ability to keep functioning is based off of that. And I think it would be massive if we get a nice little cut there. But that's all I got for you this week, guys. I hope if I don't talk to you or see you and you're not watching one of my videos or one of my TikToks, I hope you have a fantastic Independence Day next week. Be safe out there. All right, don't do anything crazy. If you're out there house shopping, I'm always available. I may be on the lake next weekend, so it might take me a few minutes to respond, but I'll hit you back up. So thanks again, guys. Remember, subscribe on YouTube. Check us out on Apple and Spotify, and we will catch y'all next time.